The Brisbane market is very active and has been in high demand since the start of the year. The industrial sector especially has continued to shine as the outperformer. Our office is being inundated with requests from owner-occupiers and investors wanting to buy industrial assets. And it looks like the word got out about the resilience of the industrial properties during the COVID period. And now everybody wants a piece of the action. Lease investments are also in high demand, and yields are sharpening as we speak. We're finding them to be around the low 6% right now. Owner-occupiers are also very active, and we're finding that the users sub 2,000 square meters are the main movers, and flood-free properties are the ones being snapped up the quickest. On the leasing side, we're finding that the south and the west are more in demand than the rest of Brisbane. And Q4 last year was where most of the leasing activity happened, and Q1 this year is continuing the pace of absorption. However, rental rates are staying quite steady. As for the other sectors, we are finding that the office market is still very sluggish with a low number of inquiries. As for the retail market, it is very much in high demand right now, and we are finding that, especially on the leasing side, that the vacancies left in the aftermath of COVID last year are starting to fill up again. Surprisingly, our agents are finding that COVID-19 is not a huge hurdle in negotiations anymore. Our Queensland government has been very effective in managing the crisis, and businesses and investors are quite relaxed in the subject when entering into transactions. In fact, our agents are usually the ones who are more concerned about a rent relief clause being the showstopper rather than the tenants and the lessors involved in the transaction. There is no doubt in Brisbane right now, the hot commodity is leased investments. With interest rates so low, investors are turning to commercial property to find healthy returns. The demand is higher than normal, and we're finding contract conditions are very much being drawn up in the seller's favor. And cash-in unconditional contracts are very common and are being seen now more than ever. So stock really is the issue right now, and investors have very little to choose from out there in the marketplace.